upstream and downstream of all of this by essentially creating all the output with their own models. So whether it's Hollywood, whether it's media, whatever it is.
Why would you give it away, right? I mean, this is what macro hard is, Elon Musk's new software company.
Yeah, what is macro hard? I'm trying to figure that out.
It's a full stack SaaS replacement. They will have everything. He's going to recreate all software on his millions of GPUs. What? And they're going to call up and do the sales, and they're going to do the customer service, everything on the GPUs. It's a play on Microsoft, obviously, but that's what he's doing with macro hard.
I've now just realized it's just the opposite of Microsoft is macro hard.
Hey guys, welcome to Everyday Finance. Raoul Pal draws attention to the fact that Bitcoin mining is evolving beyond its cryptographic roots and becoming a functional instrument for contemporary energy management. In order to stabilize grids, absorb excess renewable energy, and increase overall system efficiency, miners are increasingly forming partnerships with power providers. Paul is of the opinion that the combination of cryptocurrency incentives with renewable energy infrastructure has the potential to transform the way grids function. That which was earlier seen to be a burden on energy consumption is now developing as a demand response system that is flexible, supports the spread of renewable energy sources, and enhances grid resilience.
One of the things that when you and I first had a conversation about AI, however long ago it was, 3 years or whatever, 2.5 years ago, we both said that this is the largest deflationary shock the world has ever seen. I called it a deflationary nuclear bomb. That seems to be the case. The only thing, it was really interesting. I was listening to Mark Andreessen speaking recently, and he said the only areas of the economy that have not had inflation is where we've had government regulation stopping it on purpose. Healthcare, education, dock workers in the United States, all of that stuff. So, I mean, that's part of this is how does regulation stop the collapse of this? I mean, medical profession, they won't allow it. So there'll be some sort of endless tussle between productivity and keeping people employed.
I mean, your safest job as in this environment is a public sector worker for the San Francisco Metro or something like that, right? But this isn't positive. You've got two worlds. You have the public sector, and per economic output per token doesn't matter for the public sector. It's not like it's about optimization. But then if you're in the private sector, you're competing against AIs or humans with AIs that you can't tell it's from a human from the other side or an AI. And they don't sleep. They don't make mistakes. They're excellent cooks, not chefs. They follow recipes all day long. They A/B test at the speed of sound, and each worker equivalent, FT, full-time equivalent worker, actually costs pennies.
Agents are so cheap. So you can have hundreds or thousands of workers working on your behalf.
And so if you're a human company competing against the AI company, who's going to win? The AI company, right? All day long. So what's going to happen is, we're going to be outcompeted in the private sector. And then the question is, where do those returns come, right?
That's right. Who does it accrue to in the end?
And so the big thing here, OpenAI just announced another 10 gigawatts of data with Broadcom, right? And trillions of dollars. A lot of people are like, oh man, all the returns are going to go to the big guys with the millions of billions of chips. But like I said, what if you can have a ChatGPT 5 Pro AI on your laptop? Where does the actual returns go? That's the most deflationary thing you've ever seen, right? Because you don't even need new infrastructure to do that.
We're talking about localized AI. So this is this vision that your AI sees everything you do, hears every phone call, reads every email, reads everything you read, finds out more information, and so therefore you have superpower in your hands.
There's that, but there's also the fact that an AI that can do a economically valuable piece of work doesn't need a 2000 watt NVIDIA GPU. It might only need a 20 watt 5-year-old GPU, which is already an install base.
Is that because all of the training was done in the mega data centers, and then to actually run the model, it requires much less?
So what happened is everyone thought that you would scale like this with Grok, XAI, 100 million training dataset models, right? And then DeepSeek happened, and it was $5 million, right? It was right up there. And GPT OSS and others are about the same, actually less than $1 million for the small version. There's two worlds now. One is that you get increasing gains to massive chips. But if you look at GPT 4.5, GPT 4.5 was really original and creative and lovely, but it was $150 per million tokens. Grok 4 Fast is not a giant model, but it scores above PhD level in just about everything. And it's 50 cents. It's a much smaller model. So it might be that for economically valuable work, you can have highly efficient models that only cost a few $1,000,000 to train. And then once they train, they cost pennies to run, and they run on the GPUs that are installed already. And that's not something that people have really factored in. Again, the classical thing is they've got two worlds. One is AI is not good enough. This chip bubble explodes and it's all of GDP growth, and this other is that it is good enough and all the returns go to OpenAI and Anthropic and X. There's a third world, which is we've created this weird little file that anyone can run on just about anything, that can do your accounts and can be your doctor and everything else. And so where do the returns accrue when you don't need to hire anyone to do cognitive work anymore?
Before we get into that bit, how the fuck does it work? How can you put all of human knowledge and thinking in a localized small chip? How?
So the way that we built these models is that they're called neural networks, right? Like we looked at how the brain works. And so Carl Friston has this thing, free energy principle, about your brain operating so that energy flows downhill to the least kind of potential level. The models, again, the way they operate is, you might have seen curves that look like this. They're called loss curves when you're training a model. You have an objective function, and then you have the difference between reality and your model. And so transformers work by next token prediction. Diffusion models, again, the Soras and the self-driving cars and the image generators of the world, work by this destruction and reconstruction process. What they're not doing is encoding like a book there, right? Like the whole of Wikipedia together is 20 gigabytes. Now we have language models that are a gigabyte that can write the whole of Wikipedia. Because what they've done is what you do. You look for patterns, you look for principles, and you fold it in. You find the connections between things, how to construct and reconstruct, how to do principle-based analysis. What comes next when you've got a DeMark indicator or something like that? That's literally all these things do really, really quickly. And again, it turns out that the equations for the whole of the economy and probably complex systems can also be expressed like that. When I say expressed like that, it means you can start from that basic equation of this is minimizing loss, the difference, and derive the Cobb-Douglas function, or derive black skulls, or anything mathematically.
So basically we're A/B testing everything instantaneously via a neural network.
We are AIs. And the economy is an AI, and organizations are AI.
Yeah, I agree.
And
in order to increase his exposure to what he refers to as real money, Robert Kiyosaki is increasing his exposure to Bitcoin, gold, silver, and Ethereum, despite the fact that he is warning that a massive market meltdown is on the horizon. He is increasing his exposure to physical assets rather than withdrawing his cash holdings. The mounting debt of the United States and future liquidity injections will weaken fiat currencies and fuel hard asset booms. According to his prediction that Bitcoin could reach $250,000, gold could reach $27,000, and silver could reach $100. By the year 2026, for the purpose of providing support for his conviction, Kiyosaki relies on concepts such as Gresham's law and Metcalfe's law, citing the works of philosophers such as Jim Rickards and Tom Lee. His view that quality assets will outperform in the next economic cycle is reinforced by the fact that he continues to criticize the Federal Reserve and the Treasury for issuing what he refers to as fake money.
the way that we've had it in terms of compressing books and all of this stuff is very lossy in our outputs, when really what we're trying to do is just update our weights. We're trying to fine-tune constantly. And again, you look at reinforcement learning with human feedback. What do organizations do except for optimize and over-optimize, you know? What do we do as humans? What's our objective function? It's actually all the same thing, which is kind of crazy. And the fact that we could take all of human knowledge, or maybe say wisdom, because what's the difference between data, information, knowledge, and wisdom? When you've got data, it's like all this. When you have wisdom, it's like that, right? So what you've learned through experience. These are wisdom models, right? They are the folded principles, and they are the investment processes and the life processes. And that's how they can get so small.
A lot of people suggest that the speed of the increased intelligence is slowing down. I don't believe that. How do you think about this? Or do we just keep going?
It's slowing down because it's saturating. Like there's this company called METR that does analyses of all these things. Like they take all of the evaluation metrics. They see how long a piece of work an AI model can do. And according to every single benchmark, we will saturate every benchmark by 2027. Like, we built a medical model we released this summer. Again, we've been pretty quiet about everything. We're about to make a big deal. Like, we haven't even put out the economics paper properly and other things like that. Been quiet. 8 billion parameters. It runs on a Raspberry Pi. If you score it on the medical benchmarks, it's like 4 gigabytes. A human doctor is 20% on Health Bench, which is OpenAI's benchmark. Our model is 48%. The best model in the market is 60%. And so you look at that and you're like, wait, what? It's already better than any human doctor across 500 different evaluations. It's a couple of gigabytes big. But that means it's saturated. Like, are we going to get to 100%? No, we'll get to 70%, and then you can't do any better. If you've got a gold in the International Math Olympiad, how much better do you want, you know? Like, multi-step processes like doing your taxes and other stuff. Like, if you trade crypto, where is the AI that can do your crypto taxes? It is 3 to 6 months away. And once it does that, it will make less errors than any human. I mean, human accountants make errors all the time. Doctors, 20% of diagnoses are errors. Once these get going, they won't make any errors. So all the benchmarks are saturating. And again, sure, Elon might do 1 million GPU training run, or Anthropic will. And that might be a genius Einstein. It won't do my taxes. I'll use the model that costs $1 million to train to do my taxes. You know, and so you've got this bifurcation occurring. And in fact, GPT-5 was the first example of that. It wasn't their best model. Their best model was the one that could score the gold medal in the International Math Olympiad. But they gave us a model that was good enough and cheap. It was 10 times cheaper than the model last year. It's $10 per million tokens. But then, like I said, there was a bit of a surprise in that XAI suddenly released one that was 20 times cheaper. Have you ever seen that, right? It's like an entire, like, a bunch of AI immigrants coming, you know, sorry for the politics, that will work 20 times cheaper. What does that do to any economy? And next year it'll be 10 times cheaper than that. And next year it'll be 10 times cheaper than that.
And so it's now up to us to use the technology to drive productivity increases at a dramatic scale. But are we even ready to do that yet? Some people are, though. So I guess the private markets win, right?
Right now, I say a month or two ago, if you're like an early adopter, you were using AI by prompting synchronously. So you were still constrained by you. Now the AI models have gone from minutes to hours of independent work.
I saw Sam Altman saying they think they'll get to 7 days shortly.
If you can get to 7 days, you get to 70 days. You know, like, again, you check each other's work. What they did is they added a verifier. They added the ability for these things to... So then what happens is this. Your capability in competitive environments becomes your GPU availability for a while. So when I see OpenAI saying 200 billion of revenue and 100 billion as agents, I'm like, that's replacing the workforce for anything on the other side of a mouse. When I see they don't talk to Hollywood anymore, I'm like, because they'll make their own movies. That's how I see these big guys kind of going. Like, they're going to go after a bigger sector because ChatGPT costs $20 a month, over $20 a month to run.
So they get upstream and downstream of all of this by essentially creating all the output with their own models. So whether it's Hollywood, whether it's media, whatever it is.
Why would you give it away, right? I mean, this is what macro hard is, Elon Musk's new software company.
Yeah, what is macro hard? I'm trying to figure that out.
It's a full stack SaaS replacement. They will have
what? Everything?
Everything. He's going to recreate all software on his millions of GPUs. What? And they're going to call up and do the sales, and they're going to do the customer service, everything on the GPUs. It's a play on Microsoft, obviously, but that's what he's doing with macro hard.
I've now just realised it's just the opposite of Microsoft is macro hard.
He's a good namer. You have to give him that, right? The Boring Company, all this kind of other stuff.
I mean, it's staggering. Do we run out of data, or is the reinforcement learning and the neural network just allow it to just keep expanding its own knowledge?
It doesn't need more data. Think about it, Raoul. You now versus 20 years ago.
Yeah.
Right? How much does each incremental piece of data make you better? Not much, because you've learnt the principles.
Yeah.
Once you've got the models to a certain level of performance, you don't need any more data. They're few short learners.
Yeah, because what you're doing is you're using then the intellectual framework to then scale your own knowledge and understanding. And you don't need to be given every piece of truth, whatever it is, or every piece of data to do that. You use pattern recognition.
According to Alex Thorne, who works for Galaxy Digital, the recent decrease in Bitcoin's price is just transitory and is a natural aspect of the cryptocurrency's maturation. Following the buzz from the beginning of 2025, which was fueled by political developments, investors shifted their focus to industries that move more quickly, such as gold, nuclear energy, quantum technology, and artificial intelligence. This rotation is not something that Thorne considers to be a threat, but rather a positive indicator of market diversification. He makes the observation that ownership of Bitcoin is expanding to new investment groups, which improves the cryptocurrency's base for the long term. Despite the fact that Galaxy has lowered its price prediction for the end of the year from $185,000 to $120,000, Thorne continues to maintain an optimistic outlook. He sees the current period as a consolidation phase that positions Bitcoin for future growth that is sustainable. As discussions around quantum computing and other technologies continue to spread, Bitcoin appears to be less of a craze that is fading away and more of an asset that is entering a more mature and resilient phase.